Hi, I'm Mike Coe, and I'm addressing your open interest. If you have a question or a comment you'd like me to address it, please send me a tweet at Michael_Coe, and I will try to answer it. Okay, so we got a tweet that I think might be related to last Friday's episode of Options Action. CW says, give us another live on-air eye roll and head drop, Mike. Your shorty narrative busted down by Carter's charts and Melissa Lee pressing it home. Okay. So, first of all, I didn't realize that my eye roll may have been captured on air, but I do remember why I rolled my eyes, and it was completely unrelated to AMC. Traders are free to make bullish or bearish bets on any security for any reason or for no reason. It doesn't bother me. And as far as the technical view, I will always defer to Carter. He's the expert on that subject. I am not. What actually concerned me during that exchange was actually a comment that was made about off-exchange trading. The implication of that is that when we take a look at things like the SEC's failure to deliver reports, that somehow naked shorting and resultant failures to deliver are not captured in those reports if the trading involved occurred off-exchange. Okay, so first of all, DTCC and NSCC both capture a lot of trading volume that occurs off exchange. And secondly, I think it's important to realize that a lot of the volume that you see on any given day does occur off exchange. Once upon a time, most of the equity trading volume did occur on the exchange. So perhaps 20 years ago, 86 to 90% of the trading volume on any given day for, say, New York Stock Exchange listed securities actually occurred on the New York Stock Exchange. That really isn't true anymore. Now, as much as 50% of that volume may occur off exchange. Having it occur off exchange simply means that the trades were agreed to somewhere else and someone else printed those trades to the consolidated tape. That does not mean that those trades are somehow exempt from the settlement requirements that would normally take place. So my concern, and the reason I rolled my eyes, was because when we hear comments like that, it can perpetuate the perception that there's a large trading volume that somehow is not being tracked, that somehow is not being settled appropriately. And in fact, that isn't the case. We did have, in fairness, big failures to deliver in both AMC and GME in January, and in many other of these meme stocks, as they've been called lately. I think January 26th and January 27th of 2021 actually represented the two biggest days of cumulative failures to deliver in AMC and GameStop. But more recently, we haven't seen that issue. And I think there's another important point to be made here. That is that there has to be an incentive for someone to enter into a naked short, or there has to be a circumstance that would lead to it, such as a hard or impossible to borrow condition. At the time of last Friday's show, neither of those stocks were hard to borrow. And we didn't see really big failures to deliver. So that was the source of my frustration. That was the reason for the eye roll. If anybody else has a question or a comment you'd like me to address it, I'd be happy to. Please send me a tweet at Michael_Coe, and I'll try to answer your questions and comments as well. If you liked the content, please consider subscribing to the Open Interest YouTube channel. That's youtube.com/open interest. And of course, you can also follow or tweet me at Michael_Coe, or go to our website, www.openinterest.pro. Thanks for watching.